Alrighty. I'm going to start recording now. Oh, looks like I was already recording. Great.
Now we got some of the banter at the front
Now
end,
we
which
have
is
some
always
of
a
the
nice
fun,
thing.
exciting banter. Yeah. Yeah, although recording pause. I don't know where it's recording to. Hopefully onto my computer. Oh, we've got it on Facebook Live, so that's great. Yeah. Okay, well, thank you everyone for being here today, live from Zoom here in Central New York. So this is sponsored by the Onondaga County Cash Coalition, and it's our first Financial Friday series. And we're really excited about this. We're hoping this will give people an opportunity to learn more about their own financial health and things they can do to improve it, and also learn more about some of the services that are available here in our community. Today, we are doing building and repairing credit with Thom Dellwo. He is a financial counselor with the Financial Empowerment Centers and Cooperative Federal Credit Union. If you want to move the slide, Tom. Couple of housekeeping tips. So we are on Zoom and we are also on Facebook. If you can mute yourselves, that would be terrific, please. I think I might mute a few people for them. If they have questions, you can put them in the chat. You can also put questions on the Facebook comments. Okay, I'll be trying to check those periodically. If we have bandwidth problems, you might want to turn your videos off. There will be question and answer at the end of the workshop, and the video will be available on Facebook afterwards too. Okay, next slide. So the Onondaga Cash Coalition is a group of organizations, and honestly, Tom, I don't remember how many years they've been together because it predates me. But you can see there's a number of great organizations, including the City Financial Empowerment Centers, which is a fairly new program, free program to help people with financial planning, Jobs Plus, Lemoyne College, Cooperative Federal Credit Union, Syracuse University, Peace Incorporated, the IRS, everybody's favorite organization, the United Way, UMIA, Visions Federal Credit Union, Fidelis Care, and NEDA, we're the Northeast Holly Development Association. All right, next slide. Cash Coalition, it's all about creating assets, savings, and hope. I think no matter who you are, probably have some kind of financial stressors in your life. And so we are dedicated to promoting financial stability and asset building opportunities for low and moderate income individuals and family in Onondaga County. Next slide. Here is Tom's contact information in case you have questions afterwards, and you can always reach out to either one of us and we can connect you with resources. Take it away, Tom.
Unmute myself first. There we go.
Yes, I'll mute myself.
Okay. So thank you, Andrea. I really appreciate it. And thanks for giving me this opportunity to do this presentation. The Cash Coalition, so just so folks that don't know, so the Cash Coalition, we focus mostly on, well, a big portion of the work we do is on VITA, and we'll talk a little bit about that towards the end, which is the Volunteer Income Tax Assistance Program. But, we're part of the reason for these presentations, and this is the first of them, they're going to be every Friday, not every Friday, sorry, once a month, Friday on Fridays. And they'll be on various topics by different folks, presentations around money. But part of this is to raise awareness about the Cash Coalition, increase the folks who take advantage of free tax preparation every year so that they can get their taxes done for free by professional volunteers, And then also to highlight the work that the Cash Coalition does beyond VITA, which is working with community agencies as well as financial institutions, various different financial institutions to talk about how do we create opportunities, like it says, create opportunities for folks to build assets, so saving money, buying their first home, and particularly folks that are of modest means, right? So reaching out to those communities and making sure that they have access to opportunities to build assets. So if you have questions about Cash Coalition, let me know at the end in the Q&A or in the chat. Okay, so let's dive into credit. So credit is obviously a big topic that folks really want to know a lot about. They want to, because credit impacts so many things. But in particular, today we're going to be talking about what credit is, and how to see what's on your credit report, how to read a credit report, and then how to improve your credit. And at the end, we'll be talking about resources in the community that you can use that can get you actually individual one-on-one help for free to do this work, so that you can have a hand up when you're working on credit. So this is just right. So this is just the basics, right? So credit scores versus credit reports. So your credit report includes data on all of your loans, going back at least 7 years. We'll talk more about timeframes later, but then the credit report data is used, it's pushed through a formula, an algorithm, generally known as FICO, which stands for the Fair and Isaac Company. So Fair and Isaac were the two, I forget their first names, but they were two gentlemen who developed this algorithm and have refined it over the years. And so that information from your credit report gets pushed through an algorithm, a formula, a complex formula, and then out pops the other end a credit score. And that credit score is based on a number of factors, actually 50 factors that are in your credit report. And those factors can actually vary between credit bureaus. We'll talk a little bit more about that later. So that's kind of the diff. Credit report data is used to generate credit score. This is what's on a credit report. This is actually the summary, the table of contents from the annual credit report that you could get from annualcreditreport.com, which we're going to talk more about as the kind of free source of your credit report. And so the key areas that you want to focus on when you get your report is number 2, number 3, number 4, and number 5. So that's kind of the bulk, especially the account information, negative information. So number 2 and number 4. You also want to look at your personal information to make sure it's accurate. Inaccurate personal information might be an indication of identity theft. We'll talk more about resources for that later. But personal, the account information and the negative information, as well as the inquiries, that's the data that really generates the score. So what's going on in those in 2, 3, and 4 is what's going to generate the data that's then used to calculate a score. And so if you can address what's on the account information, what's in the negative information, and what's in the inquiries, you can improve your score. So we'll go through that. And I just want to say, like, forgive me, like so my background is in financial counseling. I didn't really give any background. My background is financial counseling, housing counseling, working with folks on building credit, and I'm used to interaction, one-on-one, and as well as in a classroom setting. I've done a lot of financial education courses and classes, and I'm more used to more interaction. So I don't love this format because I can't see you guys, I can't interact with you, I can't see heads nodding and things like that. It's really a weird situation for me because I, as a teacher, and my background is also in education, I feel like that's really important. So forgive me for this current situation, and I hope to one day be doing this presentation for people in person again. Anyway, so okay, so why are these things important, right? So credit reports and credit scores in particular set your interest rates. Credit cards, car loans, and there should be more here, like mortgages, and let's not go to employment yet. I want to talk about that, but the interest rates. So the thing that you need to, I think the thing that's helpful for folks to understand about credit scores, and we'll talk more about why credit scores are used this way, but credit scores are supposed to be indicators of risk. So a low credit score is supposed to indicate that you're a high risk of not paying a loan back. And the way financial institutions use those scores is, first and foremost, they might deny you completely, right, for a credit card or a car loan based on your score, okay? And financial institutions like this model because it reduces all that complex data that's, your history of your loans and all that stuff into a 1 3-digit number that they can then use as a gate between you and that loan, right? So like if the score is too low based on your credit score or based on your credit report, then you're just not going to get the loan.
Tom,
And then
can I
they
ask you a
also like
question?
it. Oh yeah, go ahead.
Yeah. And this, you might be covering this later, so forgive me.
Okay.
What is a good credit score? Like what's the range on the scores, and what would be considered a good one?
Yeah.
And what would be considered one that's like a problem?
Okay. So we do have a slide on this later, but I'll give you a quick preview. So 300 to 850 is the range for the FICO Classic score. There are other scoring models, but most lenders use the FICO Classic score. And so you want to be 700 or better if you can. But being under 700 doesn't mean you can't ever get approved for anything. But if you're below, I would say below 580 is going to make it pretty difficult for you to get a loan. 580 is the lowest score that is allowed without some extenuating circumstances and some other jumping through some other hoops to get an FHA mortgage. So, I mean, and a 580 is going to be, if you have a 580, it's going to be difficult to get a mortgage, and also it's going to require you to do some, like I said, more jumping through some hoops. Does that answer your question, Andrea? I'm going to assume that it does. Okay, so yeah, so interest rates. So I guess the thing that I want you to understand is that if you are approved based on the score, the lower the score is, right? So below a certain threshold, you're going to be cut off, but if it's above a certain threshold, you'll be approved. But your rate is going to be higher, so you're going to pay more. And the other thing that I think is useful for you guys to think about is interest rates are the price or the cost of money. So if you want to borrow, $100,000 to buy a home, and your score isn't as good as it could be, you might get a 6% interest rate on your home loan instead of a 3.35 or 3.25 interest rate. And that the difference between those two things, you can think of an interest rate as the price sticker on the money that you need to buy that home, the money that you're borrowing. So I think that's a useful way to understand it. Employment. So employers actually look at credit reports, not scores. They're not allowed to look at scores, but they do look at reports. And they use those, in some industries, they use those to decide if they're going to hire you or not, which is, I'm not super, I don't love that. I don't think that's a great thing. It's not the way that credit reports were intended to be used, but that's what has happened. Insurance premiums. So this is, the rate that you pay, for example, for car insurance can be affected by your score. That is the score, not the report. And the one thing that you do want to look at, or that is useful to you for credit reports, is to guard against ID theft, to actually look at your report on a regular basis and make sure that you don't see stuff that shouldn't be there. That might be an indicator that you've been the victim of identity theft. And we'll talk a little bit more about that later. If I'm going too fast, also, just holler, whoever can holler. All right, so credit reporting agencies. So these three bureaus, Experian, Equifax, and TransUnion, and to a lesser extent, a couple of others like CBC and Novus and LexisNexis, but really these are the three big ones, and these are the ones you want to be worried about. These bureaus are the companies that maintain credit report records, and the arrows on the screen indicate how data flows. So credit unions, banks, collections agencies, credit cards, the court system, in particular court system regarding bankruptcies, store credit cards. All of those entities report to the bureaus and get data back from the bureaus. And this is a paid service. So you can think of Experian, Equifax, and TransUnion as companies that make money by collecting data and selling it. One thing to keep in mind, okay, so there's kind of two ways that these organizations, credit unions, banks, collections agencies can use your data. One is to they'll, if you authorize it, they will, by authorize I mean fill out a loan application, right? You fill out a credit card application, you fill out a loan application. Then they are able to go and grab your credit report for a fee from Experian or Equifax or TransUnion or all three. Some credit unions and banks use all three, some use two, some use just one, some use different one, like we'll use two for some loans and only one for other types of loans. So there's lots of different ways that it can be used. So that, you do want to see all three of your reports, and we'll talk about how to do that in a little while. But when credit unions and banks actually pay per pull to grab that data and then use that information to decide whether they're going to make the loan, and if they are going to make the loan, how much interest to charge you. But there's another way there's another kind of instance in which these institutions will use, or at least credit unions, banks, credit card companies will use to get data from these bureaus. And it doesn't require your authorization. You actually have to opt out if you don't want your data used that way. And that is to send you pre-approval offers in the mail for credit products, right? So, that's where you generate all these, if you have a decent credit score, these mailers from credit unions or banks or credit cards, saying, hey, you qualify for, a credit card, this credit card. So you can actually opt out of that. I can share more information about how to do that, but basically it's a matter of contacting Experian, Equifax, and TransUnion and saying, I don't want my information available for marketing materials. So I can get you more info in the questions at the question and answer about how to do that. Okay, so you want to get your report, and fortunately, fortunately, I guess, / unfortunately due to COVID, annual credit report request service. So this is www.annualcreditreport.com or that 1-877-322-8228 contact number. You can actually get your credit report for free from all three bureaus every week if you would like until April 2021. This was something that the credit bureaus offered during COVID. Usually you have to pay for your credit report because, again, this is data that is gathered and sold by the bureaus. But fortunately, the federal government passed I forget the federal law, but it was a law in the early 2000s that required the credit bureaus to offer you your credit report once a year for free. This does not include your score. The companies were successfully able to lobby Congress to exclude giving you your score once a year on the grounds that it was their intellectual property. So that, you don't get your score through this, but, and this is something I say in every time I do this presentation, if you get your report and you follow the steps that we're going to outline later on, and you go through that process, your score will rise without you having to monitor it all the time. I think a lot of times folks, I don't have a problem with credit monitoring services, especially ones that are free. Sometimes they come with your credit card statement, right? So like Discover will offer you a free credit report and a free credit score monthly, and that's fine. To be honest, I think it's more important that you look at the report on a regular basis than just watch the score, because the score can move up and down for a lot of reasons, but you won't know what those reasons are until you look at the credit report itself and understand what's on it. And then you can say, oh, okay, I think it went down because of this. And we'll talk about why credit scores go up and down and in that. But, so even if you're doing credit monitoring and you're getting, emails or texts, letting you know when your credit score moves, I still think it's a good idea to get your annual credit report requests in. The credit monitoring services, a lot of them don't cover all three. So for example, Credit Karma, I believe, is TransUnion and Experian, not Equifax. So, it's not a bad idea to go here and get it, or call the 1-877 number. I like to call the 1-877 number because you can call that number, you can request your report, they'll mail it to you, a paper copy, you can mark it up. I'm a little, I guess, old fashioned in that way. I like to look at the report on paper. And so that's just useful to me. So again, you can get your credit report for free weekly until April 2021. Usually the score, if you want to purchase the score, you can do it through annualcreditreport.com, but you have to of course, put in some kind of payment information and pay about $10. And then usually there are ways to improve the score listed on the credit report, or at least it will identify what are the negative accounts, and you can look at them and see if they're accurate. The other thing I'll mention on this slide, there are a number of things that are in place right now due to COVID. So for example, most mortgages, at least the mortgages that are backed by Fannie Mae or Freddie Mac, which is the majority of mortgages in the United States, have options available for forbearance periods. So you can, if you're struggling due to COVID and you can't make your payments, you can contact your mortgage servicer and request a forbearance, and not have to make a payment for a period of time, so that you can, stay current on your mortgage, and your credit score will not suffer due to you not having enough income to make your mortgage payment. Keep in mind, when you do put that kind of forbearance in place, though, you may have to make all of those subsequent payments at the end quickly, or there may be some modification offered where you can, you don't have to pay those all off. You can put them on the back end of the loan, but you should definitely, if you're gonna do that forbearance, talk to your servicer, your mortgage servicer, and be, very clear and detailed about how it works and what's going to happen at the end of it before you put it in place. And then the other thing is for student loans. All student loans until December 31st are on pause, are on a forbearance, COVID forbearance. And so you don't have to make payments on your student loans, but they are still reporting as on time, so your credit is not suffering. But as of December 31st, that is going to end, at least now, unless there's additional executive action in the new administration. And so, you really want to, right now, be starting to think about calling your student loan servicer and saying hey, what's my payment going to look like when we pick back up? I'm still struggling due to COVID. Are there ways that I can, push that back further or reduce my payment to zero because my income is zero? Ask about income-based repayment plans, right? So that your payment is based on your income. We could do a whole section on student loans, so I don't want to get too much into that, but if there's questions, of course, follow up with me. All right, so these are some terms you're going to see when you get your credit report. So revolving loans are just credit cards or lines of credit. They call them revolving because you borrow and you pay back, you borrow and you pay back, you borrow and you pay back, and they last forever. Revolving loans can be really useful for building credit because, so we're going to talk about this later, but the major items for improving credit are keeping your balances low on revolving debt, payments on time over long periods of time. And because a credit card has no end date, you can continue to have this account that's performing well, in other words, you're making payments, or you're keeping the balance low for a long period of time, and that contributes to a better score. Mortgages also do that, but again, it's a lot easier to get a credit card and build credit with that than it is to get a mortgage and build credit with a mortgage. You pretty much can't build credit with a mortgage because you need credit to get the mortgage. Installment loans are loans with a scheduled payment and an end date. So, my installment loan is, examples are car loans, student loans, really any kind of, consumer loan that you would take that has a regular monthly payment. Inquiries are when organizations look at your credit report. So if you apply for a loan or a credit card or any kind of borrowing, right? Any kind of borrowing application, it's going to result in an inquiry on your credit report, and that inquiry will affect your score because it will. The reason why that's the case, and this is a question I get a lot, so I'll answer it. I'll probably get the question. is the credit scoring formula that we talked about earlier sees inquiries as an indicator of an elevated level of risk. So the more of them you get, the lower your score will go. There are 2 exclusions for this: shopping for a car and shopping for a home. If you're shopping for a car or shopping for a home, you are supposed to be able to get as many offers from credit agencies that offer credit, so banks, credit unions, in a 2-week period. It's confusing to me because some places I see 45 days, some places I say 2 weeks. I usually say 2 weeks because it's the shorter period, and if 45 days is right, then you're fine anyway. But in a 2-week period, you can get as many of those as you want, and it's supposed to count as 1 inquiry against your score. And the reason for that is because folks should be encouraged to shop around for different lenders. And so they shouldn't be dinged on their credit score for doing the right thing, which is shopping around to see who's going to give you the best rate. And in order to shop around, you have to apply for lots of loans at different entities, and then see what rates they're willing to offer you. So that's the one exception. And then there are also things called soft inquiries. Those other inquiries that affect your score are called hard inquiries. Soft inquiries, inquiries is kind of hard word to say. Soft inquiries are when you look at your own credit reports, or when a credit report is pulled for that marketing purposes that I mentioned earlier, so that they can pull your data and send you an offer, pre-approved offers of credit. That does not affect your score at all. So you don't have to worry about that. You can look at your credit report as much as you want. It's not going to affect your score. High credit is the largest balance you've ever had on that credit card, or on the beginning balance on a loan. So like when you first bought the car, you borrowed $15,000. That was the high credit for that. Credit limit is how much you can borrow, what you have available, and then the balance is what you owe now currently. Okay. Here we go with the scores. So again, these are FICO scores, 300 to 850. Again, 700 is prime, is like where you want to be. Above 700. At our credit union, I believe 720 is the max. So like if you got a 720 or better, you're going to get the best rate we offer. So there's no sort of advantage to having anything higher than a 720. So I think a lot of times folks, and I think that this is a good opportunity for me to say, like, there is a lot of fixation on that score, and it's understandable because it affects so much. But again, I think it's really important that you look at the report. Don't just fixate on the score. I have a lot of clients who've come in as financial counseling clients, and they're fixated on the score. It's frustrating for them because the score doesn't move up as quickly as they would like. But really having the score for you is not super useful, because having the score doesn't tell you what you need to do to fix the score. Having the score just tells you that your score needs to be fixed. So really, I would say, in some cases, I have told clients straight out, like, turn off those notifications. Like, you do not need that stress in your life, right? We will move the score up slowly over time, consistently. You just need to turn off those notifications because they're driving you nuts, and that's unhealthy. Again, 540. So here it's 540. So like I said, 580 is the bare minimum for a mortgage, an FHA mortgage. And if you're at a 580, you have to put more down, and there's a lot of hoops to jump through. Really, anything below 580 is going to be hard. So just keep that in mind. But if you're at that score, if you're below 580, that doesn't mean you can't fix it, right? And it might not take very long. Folks can raise their score significantly over short periods of time, say 3 or 6 months, by doing some things that we're going to talk about later. And let me say this too, for those of you that fixate on the score, that can be used as a trap, right, to get you to participate in credit repair companies that charge you money to help you build your score. I have not ever seen a situation where those companies were useful. Now, I don't want to downplay any work that you guys have done with a company like that, right? If it's working for you, that's fine. Just in my experience, I have not seen it be useful to pay somebody to help you build credit. Often the fees are very high. I've seen them charge as much as $15 to send out a letter that you could write yourself to dispute an item. So just really be careful with credit repair agencies and companies that tell you that they can fix your credit, because it's often not true. Yeah, this slide is really useful. So this is like, how do I get a better score, right? So, okay, so having accounts that are paid on time is the bulk of the score. So 35% of your score is payment history. So having an account that's open and making payments on time. And here's a quick tip here. I think this is really important. Credit cards with zero balances, as long as they're active, meaning as long as you usually to keep a credit card active, you need to use it like once every 6 months for something small and it will stay active. Some credit card companies don't have any inactivity time, so you can just have the card. But ideally you have some credit cards, 3 credit cards that are paid off, that report every month as you have a zero balance and they're paid on time, meaning you didn't owe a balance, so you didn't owe a payment, so you're paid on time. You can build credit without having to make a payment every month with these kinds of things, with credit cards, as long as you keep them paid off and as long as you keep them active. So, throw in, groceries on there once every 6 months, and then paying it off right away. So I think a lot of times folks think that they need to use the card actively to build a score. That's not the case. You can just have the account, and it will help you build credit. Credit balance to available credit. So this is called the utilization rate. So that's 30% of your score. So basically the idea is keep your balances on credit cards or lines of credit low. Lines of credit include things like overdraft protection. So if you have an overdraft protection account connected to your checking account and it's got a balance on it and it's over 30%, that's hurting your score. So pay down your credit card debt to the extent that you're able. I know that's easier said than done, but pay down your credit card debt so that you can increase your score. Length of credit history, keeping older accounts open and keeping them open for long periods of time with good payment history, that's going to help a lot. Credit inquiries and new credit, like that basically is like keeping those things down, right? So reducing the amount of times you have credit inquiries, reducing the amount of new credit you're applying for. And then the credit mix is having some installment loans and some credit cards. But again, that's only 10%. So if you only have, a couple, 3 credit cards and you have no other installment loans, you can still have a decent score. You could still have a score over 720 with just credit cards. There's no reason why you couldn't get there. And so that's something to keep in mind as well. These are things that don't affect your score. And I say that it's not 100% accurate because, right, so your income is not posted on your credit report, right? Nobody looks at your credit report and knows how much you earn. And they don't know the where you live doesn't affect your credit score. Whether you're employed or not doesn't affect your credit score. Savings accounts don't affect your credit score. Checking accounts don't affect your credit score, unless, okay, savings accounts and checking accounts go delinquent. In other words, they go negative and you don't pay them. Sometimes they can be sent to collections agencies and then those can end up on your score and hurt you. That's the same with things like National Grid, so your utility company or your cell phone company. If those accounts go delinquent and they get sent to a collections agency, they can be reported to your credit report. And of course, not having income and having debt that you need to pay and not being able to pay it affects your score. So indirectly, income does affect your score. Indirectly, employment does affect your score, because if you're not employed and you're not making money and you're not able to make your payments, of course, it's going to affect your score. So, but they're not directly affected. And I think it's important to say, I'll say this here, there is a move, at least on the part of Experian right now, to add a feature where you can self-report some utility bills and other types of bills like cell phones. The way that it works is you sign up. It's called Experian Boost. You sign up, you link your checking account to the to Experian. Experian then gathers data from your checking account. Every time you make a National Grid payment, it sees the National Grid payment and it marks you as having paid on time your National Grid bill this month. I am not really clear as to how much that affects your score, or how, like, if that's really a good thing or a bad thing yet. It's relatively new. I think they rolled it out in 2019. I have seen it on some folks' credit reports, but it's hard for me to tell how much that's helping their score or not. I don't think it's a bad thing necessarily. I've had some reports from people that it costs money to do it and some reports from people that it's free. So and I haven't signed up for it myself, so I don't know. You'll have to do that research yourself. If you're paying for it, I don't know whether it's worth it, but if it's free, maybe. And the other thing to keep in mind is that that's just Experian. So TransUnion and Equifax have not rolled a product like that out. I can't imagine that they're not working on it, because it's definitely a product that I think people like. There's a lot of folks that feel like it's not fair that they don't get credit for paying on time, bills on time, and they should. And so I can't imagine that TransUnion and Equifax won't roll something like that out in the future, but it's not here yet. So if you go to apply for a loan at a bank or credit union that doesn't use Experian, it's not helping. All right, here's timeframes. So first, get your credit report, then review it. What you're looking for on collections accounts is the date of last activity. Usually they use that as a proxy for the date of first delinquency. And so you see in item 2 here, negative information 7 years plus 6 months from the date of first delinquency. So, so if you had an account that went delinquent in November of 2013, man, you'd think I could do math. I'm a financial counselor. 2013, so November of 2013, in 6 months from today, that account should be expunged from your credit report, or 6 months from the month of November, it should be expunged from your credit report. So it has to do when the account went delinquent first. It's important to keep in mind that if you have if there is a debt like that, where you think it went delinquent, not opened, but went delinquent more than 7.5 years ago, then you should dispute it. Either if you're on annual credit report request service, you can click dispute right there. You can put in your information. This debt is past its time. Date of last activity says it was 7 years plus 6 months old, and then request to be removed. Be careful if you have debts that are older in collections, and collections agencies call you, or you reach out to them and you offer to make a payment arrangement with them. If you offer to make a payment arrangement with them, it resets the date of the last activity because that's new activity on that same account. And then if you default on that, so if you stop payment on that that payment plan you agreed to the collections agency with, it can restart the clock and then it can stay on for longer. So just watch out for that. In my opinion, it's best to, if you're going to negotiate with collections agencies on debts that are old, then you should negotiate for settlement or payoff, not payment plans. That's not really a good thing to do. You can't have true information forced off, but you can request it, and sometimes they will remove it. So if you have a collections agency that you pay off, you can request that they remove it. They might say no, they're not legally obligated to remove it until 7 years and 6 months, but you can request it. And then positive stuff, good information stays on forever, indefinitely. It doesn't have to be removed. So that's why you'll see old accounts as long as they had good information, and that's good. They're helping you build a better score. And then bankruptcy, 10 years from discharge if it was a Chapter 7, up to 12 years from the start of the payment plan if it's a Chapter 13, because Chapter 13s can have an up to 5-year repayment plan, and then they can stay on for 7 years after that, after that's completed. So yeah, this is just some information on disputes. Okay, so like 20% of 20% of reports have errors, and those errors affected people's ability to get loans. So if you see an error in a credit report, either dispute it online, like through annual credit report request service, or you can dispute it online through the bureau themselves. There's each bureau has a dispute link. You can create an account. You have to create an account. You log in, you identify the item, and you dispute it. Or you can do it by mail. I tend to like to do it by mail. It feels like a more formal process. You can send it signature confirmation, verify they received it. I have templates for mail available if you want to email me and request one. You can use those to mail in to dispute the items. It's really important that you follow up. So they have 30 days to respond. If you don't get a response in 30 days, follow up, call the credit bureau and say, hey, I sent out a dispute. I see that you received it 30 days ago. I haven't gotten a response, but it's still reporting on my credit report. What's up with that? So, follow up is really key. It is really, really, just as a side note, quick side note, I do some of the dispute response for people when they send in disputes to the credit union. And when they send in disputes to the credit union, all I have to do is log on to a system and say it's correct. They don't require me to send documentation. There's no, now I, as a person I like to think that I have integrity. I actually check records and make sure that we are reporting correctly. I can't say that that's done everywhere. So I would really encourage you to follow up, push it. You know, if you're not getting a good answer, you know, or an answer that you think is legal, you know, go up to the next level. Don't be afraid to file a complaint with the New York State Attorney General. They are awesome. They will help you. They can't be your attorney, but they can contact the company on your behalf and say, hey, this person did these things the way they're supposed to, and you're not following up, you're not doing the right thing. And they can actually help put pressure on them to do the right thing. So I really encourage you. And there's an online form at the New York State Attorney General's website. Okay. We'll go back. So if you think, there's another system that you can use called debt validation, which is basically this. So the disputes go to the bureaus, right? You're saying this is wrong on your credit report. You're responsible for what's on your credit report. It should be taken off. Debt validation goes to the agency, the collections agency. So if you see something on your credit report, you can do both. You can dispute it with the bureaus and send a debt validation letter. Again, I have templates of this if you want to use it. Basically, if you get a letter in the mail from a collections agency that says you owe this debt, you have 30 days from that notice to send them a letter back saying, I don't recognize this debt. I want more information, and they have to respond. And if they don't respond if you respond within 30 days and they don't respond, they have to take it off your credit report. This does not work if you just find it on your credit report. You can send a debt validation letter for an item that you find on your credit report, but they are not required to respond to that with this. They're required to respond to it, but they're not required to take the debt off if they don't respond within the time period. And then if you see stuff that's wrong on your credit report, I'm just going to click this link. Use this kit. I'll share this again. This kit is from the FTC. There's a whole packet of useful tools on recovering from identity theft. It's really, really useful. I've used it with a lot of clients. And they actually you can create an account, and then you can upload all your documents here. You can upload your police report, and it's like a one-stop. It keeps all your data and helps you through the process of identity theft, tells you what you need to do. So I really recommend that tool, that resource. Let me go back to my presentation. Go back to my slide. So let's see. Disputing. Here we go. Okay. And of course, file a police report. And that's as simple as calling the non-emergency number for the police. I have been told by the police that sometimes call the emergency number, but I really, that seems weird to call that number for identity theft. It's not like an emergency, but call the non-emergency number for your local police department and ask them tell them that you think you've been the victim of identity theft. They should send somebody out or tell you how you can file a police report. It's not a matter that you think they're gonna catch anyone, although it'd be nice if they did. It's that you need that police report to document the theft that you filed it, so that you can use that police report to send to people that have your think you owe them money that you don't. So that's useful. All right, so grab your credit report, look through it. If you see items on there that are true that you want to settle, try to get together some savings before you contact them, so you have some money to settle with. If you have just high credit card debt, it's just the credit card debt and you're struggling with it, you want to start with the highest interest rate. APR stands for annual percentage rate. That's your interest rate. Pay those first. There are also, I'll give a shout out to Rethinking Debt, which is a Rochester consumer credit counseling services. FEC partners with them. They actually have an FEC program in Rochester, and they do debt management plans, which can be helpful for folks that have high credit card debt and they just need help reducing the interest rate so they can pay it off. So if you want that resource, you can reach out to us. We can definitely help with that. And then anytime you talk to collections agencies, keep records of who you spoke to, what they said. If you get a settlement offer, get it in writing before you send the money. If they won't send it to you in writing, get an email address for the company that you can send an email stating what you got out of the conversation. So who you spoke to, that they said they were gonna, your debt was this, but they're willing to accept this. Send the email to them and then keep a copy of that email. that at least shows that you documented what the agreement was in writing. And if they don't respond saying, no, that's incorrect, then you have, documentation that you have, that was the agreement, and that's good enough. From our training, an attorney came into our training and taught us about that as a tool. Most of the time they will give you something in writing though, saying, your debt was this, we're settling for this. I gotta hurry up here. So when negotiating a payoff amount, state you want the letter, say you want it settled in full. Sometimes they'll say, well, we can only do settled for less than full balance. That's fine. Student loans are hard to be erased and negotiated, but they can be deferred, consolidated, and do income-based repayments. FEC. This is how you get an appointment at FEC. So SyracuseFEC.org. This is free one-on-one financial counseling offered by the City of Syracuse, home headquarters, Cooperative Federal. So these are one-on-one professional counselors. You can meet with them as many times as you would like to work on building credit, savings, and reducing debt, bank accounts, checking accounts, savings accounts, all types of things related to finance. And we also, we have lots of referrals at our disposal for stuff we don't know how to do. So we're taught what we can do and what we can't do. And for what we can't do, we can connect you with other resources.
Can I interrupt, Tom?
Yeah, please.
Yeah, so the great thing about the Financial Empowerment Center is if you live in the city of Syracuse, you are eligible to use it for free. So any city resident, you don't have to be a low or moderate income person. That's you right. You can, whatever your situation, you can go and get this really terrific service.
Yeah. It's best to fill out this form. You do have to select a location, but all of our appointments now are virtual. So you don't even have to leave your house. You can do it through Zoom. We can do it over the phone, whatever works for you. But you do have to select a location on here. We're getting that fixed. But for now, just select any location. It doesn't matter. You won't be assigned to that location.
Hey, Tom, we've got a question in the chat.
Yeah.
We have someone on Facebook who's asking, do student loans hinder getting a home loan?
They can. So a couple reasons. They can hinder getting a home loan if they're in default. So if you're behind on your student loans, it's important to get out of default. There's a couple of ways to do that. One is to do a direct loans consolidation to get out of default, and the other is to do a rehabilitation plan. I can talk more offline if the person who's asking the question wants to reach out to me. If they're current and they're on time, they're contributing to a better score, but they can affect you in that the payments on them are calculated into your debt to income ratio. And if they're too high, that can make it very difficult to get a mortgage. That being said, some lenders do use income-based repayments as the payment plan. So as the monthly amount. So if you're on an income-based repayment plan, let's say you have a really high student loan debt, which I see a lot. It's a really big problem. I have clients who have, close to $300,000 in student loan debt. Payments on that would be really high if you were having to make the payments, regular payments. But because this client is on an income-based repayment plan, the payments are very low and she is able to afford them. And the mortgage company, depending on the mortgage company, they can use that income-based repayment instead of the full repayment as against your DTI, and that can make you eligible for a mortgage that you wouldn't otherwise be eligible for. It can be tricky. You should definitely, if you're trying to get a mortgage, you should definitely talk to your lender and say, hey, I've got some significant student loan debt. How do you calculate my income, my payment into my my DTI? What does that look like? And then get that information from them so you can know if they're likely to approve you. And if you want more questions, obviously follow up. These are our counselors, our lovely, lovely counselors. So they're all, here and available for you. And I think that's it. I'll leave those guys up because I like that better than my question mark question. Question mark picture, because they're so nice. This is a new program, by the way. This has only been around for a little over a year, but it's really, the counselors are doing a really, really great job and really helping a lot of folks. So that's it.
That's great, Tom. Thank you so much. It's a lot of information and a lot of detail.
I know. Sorry.
Does anyone else have any questions they'd like to ask? You can either type it in the chat or take yourself off mute if you needed to. And somebody's asking on Facebook for a link to connect with you guys. I will post that
Sure.
on Facebook.
Yep, SyracuseFEC.org.
Okay, great, thanks.
And we're gonna be doing more of these, like I said, so definitely check back and tune in. It's not just gonna be me. So it's gonna be other people as well. I think we have folks lined up from AmeriQ. We have some folks, Jenna, one of our other counselors, is gonna be doing a budgeting session in January. So stay tuned for that.
I think there's a slide with the information on them.
Oh, is there?
Yeah.
Let's see. Yeah, there it is. Look at that.
Hey, there's also a little plug for the tax prep.
Yes, let's go back to that.
Why don't you cover that for people, please?
Sure, yeah. VITA is free. It's volunteer income tax assistance. So, you can get your taxes done as long as you make less than $56,000 a year. Basically it'll be virtual prep. You provide your docs, they do your taxes, and you save yourself the money you'd otherwise be paying to a paid preparer. We have a really low uptake of this program. I mean, across the country, it's low, but so I think the last time I looked at the numbers, it was like 6% of the people that are eligible for this use it. So we really don't want this to be Syracuse's like best kept secret for free tax prep, right? Like we want folks to use this. So please, contact Meredith if you wanna volunteer. We need help. We need volunteers. It's really, the training is not difficult. It's an online training. You can complete the training and then you can become a certified volunteer who can prepare taxes. It's a really great program, and I strongly recommend you reach out to one.
So NEDA's going to be a drop-off site this year. So awesome. People, because of COVID, we're not going to do face-to-face, but we will be a drop-off site. We will also be sending information out. We have a weekly e-blast, which I'm sure many of you are on. If you are not on our weekly e-blast, go ahead to nehda.org and sign up. We send out information about the North Side primarily, but also a lot of resources like this, and we will be promoting tax prep as all those details become available. You can also call our office, which is also on our website. So,
and then again, yeah, here's the upcoming events.
December 4th.
Jenna's not doing. Sorry, go ahead, Andrea.
No, that's all right. December 4th, you can see, is going to be about identity theft, and that's Charlie Knoll from AmeriQ Credit Union. And on January 8th, Jenna will be doing debt and FICO relief. And, I think right after the holidays is the time we all want to talk about debt.
Right,
so,
right.
But I would say approach these holidays, people say, don't show people that you love them by going into debt.
Seriously.
That's your holiday budget now. Make good choices as we're going into these holidays, and really think about what does it really mean to give a gift, and how much do you actually have to spend to show someone you love them. Yep. And it's tough. Trust me, I'm not a paragon of virtue, but I've learned a lot of hard lessons over the years. So. Yeah. Does anyone have any other questions? Oh, we've got something on Facebook. Meredith, you can also reach out to Meredith on Onondaga Cash with questions about getting your taxes done or volunteering by messaging the Facebook account at Onondaga Cash. And that note is in the chat on Nita's Facebook page. And you're welcome to contact any of us if you're trying to get a hold of someone. My email is Andrea, ANDREA @nehda.org, and we'll connect you with who you need. So, any other questions? Look at us, it's 1 o'clock.
I know.
It's the Friday before I know not everybody works Monday, Tuesday, and many on Wednesday next week, but it feels like the holidays almost upon us.
Yep.
And we're really glad you chose to spend time with us today. We'd love to have feedback. Feel free to reach out if you have feedback on the series. I'm confident we're going to continue to talk about subjects and topics. If there's a topic you'd like to learn more about, please send it to us. We'd love to hear. Thom, thank you so much for
No
sharing
problem.
this pretty kind of complicated information.
Yeah.
I think credit scores scare people.
Mhm.
And I loved the takeaway for me is, don't fixate on the score, look at the report and look where you can make changes in the report, because that's what drives the score.
Exactly.
And don't drive yourself crazy. My main thing
Yes.
is why would you check your credit score every week?
Yes.
Like, I mean,
Yes.
it's bad enough to look at your bank account that, every
Yes.
day. So I think those were really, really good general suggestions for people. So
Cool. Thanks.
yeah. Well, thank you. I'll hang out on the Zoom for a couple minutes if people need to chat. Thank you, Thom, and I'm sure we will bring you back at some point to give us more information.
Okay.
All righty.
Take care.
I'm going to turn off the Facebook Live.